Rising like the phoenix from the ashes, ICP suddenly outperforms everything else. The question is why? Who's buying here? Who's selling here? What's causing the recent rally? Let's have a look at the on-chain data, the data most people are not considering. Let's try to figure out how much longer this rally might last. Because while there are a lot of supporters of Internet Computer, the journey has not been without its troubles. We went from above $400 all the way to below $4, a drop of 99%. Whenever ICP hits a new low and then bounces, we tend to see a little bit of an uptick afterwards again. We have been trading sideways for the last 2 years, and this is our recent bounce. Now the problem is that we cannot look at ICP in isolation. We always have to compare it to the rest of the market. Is it doing better than other altcoins? Is it doing worse? Let's have a look at that relative valuation chart. And now we get a much more clear representation of what's going on. Yes, both the US dollar chart and the relative valuation chart go down over time. We can see that in terms of relative valuation, the underperformance is much more consistent. We did have a bit of a rally at the end of 2023 though. 160% outperformance until the long-term trend continued again. This chart also puts the current rally into perspective, as in this was a 70% increase, this was somewhere between 190 and 150%, and so far we are up 47%. Now, why does a cryptocurrency underperform that consistently versus the rest of the market? Usually the answer is tokenomics, as in new supply hits the market while the demand cannot grow at the same rate. There's a dedicated website just on the tokenomics of ICP. It's dashboard.internetcomputer.org/tokenomics. Apparently, the annualized inflation rate is only 6%, but that doesn't really align with the long-term underperformance. Over the last 3 years, despite those medium-term rallies, we have seen ICP underperform by 64%. So something doesn't really add up here. There's a burning mechanism as well. There is minting through mining and through staking. And in the end, the official numbers, they do show an increasing supply over time. But there seems to be a constant offloading of ICP tokens that are outside of the officially stated numbers. Because here's the thing, supply expansion really does matter over time. Compare the market cap development with the price development of ICP over time. The market cap development already doesn't look that great, as in we peaked after launch at around $18 billion. We had our rallies every now and then, and we are at close to $2 billion right now. But compare this chart with the price chart. The price chart looks much worse. Again, because the number of circulating ICP tokens over time goes up. Have a look at this. This is the ICP dominance chart. You might have heard of the Bitcoin dominance chart, right? This shows how much of all of crypto is currently in Bitcoin. ICP dominance is the same for ICP. How important is ICP within the entire crypto ecosystem? And we can see that this is declining very significantly over time. We were at 1.9%, now we are at 0.06%. My impression is that enough people have figured out that ICP is highly inflationary and tends to underperform long term. Thus, there are ways to just bet on falling prices of the asset. Now, if enough people bet on falling prices of an asset, it might be profitable for the market makers to buy up the token to induce a short squeeze. Something very similar to what happened with GameStop, for example. With GameStop, it was the hedge funds that were betting on falling prices of GME. And then it was the retail investor that bought up GME, maybe through leverage, maybe through options. But in general, retail bought the token or bought the stock at the time, and then the hedge funds got liquidated with their short positions. Here with ICP, I think the opposite is happening, as in the retail investor is betting on falling prices long term of ICP, and then the market makers buy up the token in order to force liquidate the retail investor. We can see how sensitive the ICP price is towards the leverage that's induced via the perpetual futures, via the levered bets on the price. There was this big event on the 10th of October. Many cryptocurrencies crashed within a few minutes because of the unwind of various perpetual futures positions, and ICP went down by 60%. The entire crypto market also went down. This is now the others market cap, but it went down by only 47%. So ICP was more sensitive towards this deleveraging compared to the average altcoin. By the way, if you're enjoying this video so far, then feel free to give it a like. It will help to spread the word. It will tell the algorithm to show the video to more people. Thank you very much. Just have a look at this. 12.8 million of liquidations on that single day. And it was all long position. And that has changed the long-term dynamics of ICP on the perpetual futures market. In the past, there was a positive funding rate for ICP. So it was mainly the retail investor that was betting on falling prices and then the market makers that held the ICP tokens, keeping the funding rate positive. So the longs had to pay the shorts in order to bet on rising prices. But then came the flash crash. Then all the long investors got liquidated. At least the long investors on the retail front. The funding rate got incredibly negative, but it never normalized again. And this is specific to ICP. For most other altcoins, we now see a normalization again to a positive funding rate. But now the market makers don't want to buy ICP that much anymore, at least long term, unless, of course, they can liquidate again the shorts. And that's currently what's happening. We see a very quick move to the upside. The funding rate turns negative again, and that creates even more incentive for the market makers to induce even further short squeezes. So open interest went up again. Many traders are betting on falling prices. The majority of traders are. And that could mean that this short squeeze could last a bit longer. We might see a secondary short squeeze in a similar way as we saw at the end of 2023. So if you take that price development and we overlay it to today, that's a potential outcome. The current rally might go on for a bit, then things settle down, and then we could see a secondary short squeeze until the long-term trend continues. So it's very dangerous to bet on falling prices right now because the funding rate is still negative. But once it turns positive again, at some point the token inflation will likely take over again. And then ICP will likely continue to underperform the rest of the market. Could we see $5 or $10 or maybe even $15 in ICP again? Yes, it's very much possible. Not going to happen gradually. It's likely going to happen very violently again in order to liquidate the shorts. And then at some point, the long-term trend is likely taking over again. Because really, who believes that kind of inflation rate when the underperformance is so consistent? What I find fascinating is that the development within the altcoin market seems to move contrary to what's happening in Bitcoin. So in Bitcoin tends to do better, then the altcoins are rather weak. When the altcoins tend to do better, then Bitcoin tends to be weak. What we're seeing over here, that's the others dominance. So how much of all of crypto is in the altcoins that are not in the top 10 in terms of market cap? So it's a percent range that tends to peak out at around 20%. It's currently at 7%. Now have a look at the following. Let's have a look at the peaks and the bottoms. Let's also see where there's a potential support. That's maybe here. And let's now compare this with the Bitcoin dominance. So how much of all of crypto is currently in Bitcoin? Whenever the others dominance is peaking, the Bitcoin dominance tends to be low. Whenever the others dominance is bottoming, the Bitcoin dominance tends to be high. Here's another such peak where the Bitcoin dominance is high and the others dominance is low. So there seems to be a direct inverse correlation. And since the beginning of 2022, the altcoins tend to underperform and Bitcoin tends to outperform. And Bitcoin tends to trade in a range. It tends to peak at a dominance of 73%. So once Bitcoin is 73% of all of crypto, the altcoins historically were very cheap. The problem for altcoins right now is that the others dominance still continues to go down and Bitcoin dominance still tends to go up. And while the others dominance didn't necessarily always bottom at the exact same level, it tended to be somewhere around 5 to 6%. And currently we are at 7% dominance. And again, Bitcoin dominance has way more room to go until the altcoins become historically cheap again. So really, it does make sense to be selective when purchasing alts. It's maybe not the best time to have a diversified altcoin portfolio because most of them are likely going to be worse medium-term performers. What we see over here is the others market cap. So how much capital is currently in the altcoins that are not in the top 10? We're not looking at the others dominance, but at the others market cap. And the altcoins do have a hard time getting above 500 billion market cap in aggregate. Here's a similar metric. This is total 3 ES. So that's all the altcoins that are not Bitcoin and Ethereum, and we also exclude the stablecoin. This metric has a hard time going above 1 trillion. There is a fundamental problem though with all of those metrics. So with the others dominance, with the others market cap, with the total 3 ES market cap. And the problem is that market caps are not a good indication of where prices are going. And prices in the end determine our performance as an investor. Let me show you what I mean. Here as a representative example, we've got WorldCoin. WorldCoin tends to peak at higher highs in its market cap over the very long term. Yes, we've got our volatility. Currently we tend to dip a little bit, but in general, over time, the market cap is going up. Now compare this with the long-term price chart. That's very different, right? It's not going up from peak to peak. The peaks are lower over time. And the reason for that is token inflation. It's the number of WLD or WorldCoin tokens that get issued over time. The supply grew by 8x over the span of a bit over 2 years. That's of course very extreme, but in general, we tend to see most altcoins expanding their supply quicker than Bitcoin or Ethereum or Solana over time. The effect is very drastic. So every week we see more than 1 billion worth of unlocks in the altcoin market. And that's just for the altcoins that are tracked here on this website, Tokenomics.ai. And so I believe this is where the market inefficiency is, where we can actually exploit that inefficiency and make money. Because it seems to be obvious that something like WorldCoin should go down in price over time. It might not go down in market cap, but it will go down in price if the supply expands this way. Yet the vast majority of traders does not agree. Have a look at this. This is the perpetual futures funding rate. So with perpetual futures, we are betting on a price. We are not buying the asset. We are betting on the price to go in either direction, to the long side, so it goes up, or to the short side, it goes down. And because the funding rate is positive most of the time, most traders on the perpetual futures market are betting on WorldCoin going up long term. They're also betting on it going up right now. Again, despite the supply expansion, despite what history has already told us. Isn't that interesting? Most perp traders got wrecked because of the token inflation. Or in other words, the token inflation is not properly priced into the funding rate. And so really, the game should not necessarily be to try to find the next small altcoin that does another 10 or 100x. Here's the performance of the smaller altcoins in the last year. Most of them went down. Yes, the larger altcoins did better. So here's the performance of the top 100, but still, even they, in aggregate, went up only by 43% in the last year. While at the same time, Bitcoin went up by 71%. Ethereum went up by 69%. So even the biggest of the altcoins aren't doing great. The smaller altcoins do even worse. Have a look at this. This is Hyperliquid. This is the funding rate of WorldCoin right now. It's 11%. The longs have to pay the shorts 11% per annum to bet on rising prices. In other words, when we bet on falling prices of something like WorldCoin, we are even getting paid 11% per annum. And then we are making money on top of that because of the long-term underperformance. This is the WorldCoin price relative to Bitcoin over the long term. It went down by more than 90%. But now imagine we are flipping this around. We are betting on falling prices of highly inflating altcoins. At the same time, we bet on rising prices of Bitcoin, Ethereum, or Solana. So instead of having this relative performance, we are getting this relative performance. Isn't that much more attractive than even just buying Bitcoin itself? This is a performance of 900%. Bitcoin during the same time period made a performance of 289%. So there's clearly alpha in a strategy like this. There's also volatility, like we see over here, but this is a quote-unquote buying opportunity, right? We double down on being even more long Bitcoin and even more short WorldCoin. If you, of course, believe that long-term the tokenomics will prevail, which they have over years. And again, this is just an example. Many altcoins work like this. The overall altcoin market sees massive unlocks every single week. And the reason why those unlocks exist is because the venture capitalists, they want to pull out their capital. The team wants to pull out capital. The insiders, the KOLs, etc., they want to pull out the capital. They are all dumping on the retail investor, and they are dumping at a very quick rate. That is very harmful for the altcoin market. That's why we see this performance across the board. I'm following this kind of strategy already for 4 years. In the early days, it was with borrowing and lending platforms like Aave. Nowadays, it's with perpetual futures. And this is my long-term performance here. So this is a monthly chart. It shows the last 4 years. Had I just dollar cost average into Bitcoin, I would have gotten this return here at this light gray line. But because I also bet on falling altcoins over time, I got long-term outperformance. And this is really what crypto should all be about. It's about the constant alpha. It's not about finding the 1 or 2 lucky moonshots. We want to simply compound our capital reliably over time. I have made many videos on the topic, but you don't have to watch all of those videos. You can simply stick with 3 of them. The first one is over here, using perpetual futures to bet on relative valuations. Then this one over here, risk management with relative valuation bets. Very important. People that didn't have this in place, they got wrecked in the recent crypto shakeout, which was, by the way, one of our most profitable days. Everybody has lost their money, but we had our risk management properly in place. And one part of that risk management is, of course, also setting effective stop losses. So that's video number 3. In total, all 3 of those videos combined is roughly 1 hour of content. Once you've watched that content and you've joined the community, I will share my favorite trade with you. If you do not make money with that trade after opening it and after holding it for 1 month, then I'll refund the premium membership fees to you. So really, you are not risking those $125 per month. If you do not like premium, if you do not make money with that trade that I will send you after joining, then I will just send that money back, no questions asked. A link to premium will pop up directly here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium.